Is it going to YouTube and
We're not
Facebook?
live, but I noticed the other day you weren't live either on Facebook.
Well, something changed on here. It says setting up for YouTube Live, but I wanted to do Facebook Live. So did I choose the wrong thing here?
As
Let
long
me
as it's
see if it's
recording.
on Facebook. It's currently not, but let's see. It shows me on YouTube. Well, if this sets up, let's see if I can take that and share it to Facebook real quick. So bear with me just a second. All right. Yep. We are live on the wonderful world of YouTube. So I'm just going to punch that into Facebook. This is a new experience for me. All right. Well, give me 2 more seconds because, again, this is something different. And my computer is slow a little bit. It's not me that's slow. It's my computer, kind of like Joe said. We'll go with that.
Yes. I tend to infect everybody with my technical difficulties.
Let's see. So let's try this. All right, I'm just going to post it live here so it goes. All right, we're going to do this different. So that's where it's going. So we are effectively live on YouTube today for the first time ever, I guess. So that's kind of cool. Sharing it across to Facebook as well, although it doesn't look like it's straight. I think people would have to click it to get to it. So we'll see how this goes. Anyways, good morning. Happy February the 3rd. Happy super, super week here. And yes, I said super because, Super Bowl, I think, this weekend. So, Danny, can you introduce yourself?
Yes, of course. Good morning, everybody, and thanks again, Ryan, for allowing me to be part of this morning update. I'm Danny Espinoza with All Trails Mortgage, coming to you from the foothills here in Upland. Local mortgage broker, been doing this for quite a while, but hopefully I give you guys some insight what the market's doing, what it's not doing, and hopefully we bust some myths today if we can.
Good stuff. Joe, you want to introduce yourself, sir?
I'm sorry, you cut out. Was that for Joe?
Yeah, Joe, would you like to introduce yourself?
Yes. Yeah, hi. I'm Joe DiNoto, and Paul and I are here representing Trustmark Home Inspections. And Paul is prepared with remarks. I'm here for the free snacks and some supportive role.
That's
Thank you so
awesome.
much for having us today.
Our pleasure. Our pleasure. What about you, Paul?
Yeah, thanks, Brian, for having us. I appreciate it. I'm going to touch on a couple of things in regards to the home inspection space today, notably how agents can reduce their liability as it relates to the home inspection. So I'm really excited.
All right. All right. Well, good stuff, guys. Hey, we got a lot to go through in a short period of time. So if you do have questions at any point, whether you're on YouTube, whether you're on Zoom or Facebook, please put them in or DM us. We want to make sure that we do our best to answer any questions you might have. Each and every week, we try and do our best to quickly, effectively be able to jump in and share what's happening locally in our real estate marketplace so that you, as a real estate professional, or if you are a homeowner, home buyer, home seller, you can see some pretty good references and data-driven information as to what's going in the market real time. Our focus predominantly is the Inland Empire and based or centered out of Rancho Cucamonga. So if there is some bias towards that, that is the reason up front and fully disclosed. All right, now here is our website. We always come back and we reference this market update tool. I have a few different cities pulled up in the background, or at least I thought I did. Looks like they're having a refresh. Again, this is part of my computer running a little bit slow today. All right, check it out. Total units for single family, 135 in Rancho. It's actually down from last week. It was like 155 or 154. So inventory has come down. Price reductions have continued to come down. And guess what? Days on market is slightly down as well. And check this out, Danny, what are your thoughts as we look at 1.1 or 1.9 million dollars, and we're in the 70s on the days on market for that expensive of a house?
It's telling you the supply is very technical in the sense. I mean, not the supply, the demand, right? So people are looking at everything. Affordability is huge. That's the biggest question that everybody asks. How can I make my payment lower? What can I do? Is there a magic program that we can use? No, it's called down payment or interest rates. So if you don't have a huge down payment, it's hard to get that down payment to where it's comfortable for people. And that's why we're seeing those days on the market, because people aren't so quick to pull the trigger unless they have a large down payment. Not that it's needed, but at the same time,
Right.
right now, one of
Kind
the
of bummed here.
things, go ahead.
I was kind of bummed. I had this all pulled up so that this wouldn't be an issue, and now I'm at the wheel in the sky. It's just spinning here on me. So I'll leave it here until I see that come
No
through.
worries.
Um, no, the market's definitely, and anybody on this call, because we're all in the real estate space. Have you been talking to your realtor clients and or significant others, and are they telling you in regards to an increase in activity? What are you seeing and feeling on the street right now? Like if someone says to you, "How is real estate?" What is your current reply?
It's currently active. It's currently active. There's a lot more activity right now. Over the weekend, a lot of pre-approvals over this last weekend. People were, I honestly think, they say that when interest rates drop, it takes 2 to 3 weeks for people to catch on and then start doing something about it. So in the purchase market, that's exactly what happened. So the rates were the lowest 2, 3 weeks ago. And now all of a sudden everybody's calling asking about rates. So even with the media, even with what's going on, the free marketing that we're getting from media, right? People still wake up 2 to 3 weeks after the fact. People call you to refinance 2 to 3 weeks after the fact. So I think that's where we're seeing that activity from the rates drop into their lowest in 3 years, 2 or 3 weeks ago. So I think that's part of what we're seeing. I'm seeing a lot more activity. So I'm not sure if everybody else is.
Right.
And if I might add, we have seen a big uptick. December was a regular December, but January was absolutely off to the races. It took everything we had just to get everything scheduled and inspections completed. We were running at over capacity, just trying to get everybody scheduled and again inspections completed. So very good sign. We're seeing very good signs, and it's certainly an uptick.
Right. 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 And I apologize, guys. My computer is really not. Danny, I'm going to try and push it over to you if you want to do some of the shares for what you have while I try and shut some things down on my computer
Sure.
so that maybe I can get more bandwidth back here.
Yeah, definitely. No problem. Let me jump on here. One of the things I do want to share, since I've got a quick second, I'm going to share what the market is doing today, right? Let's see here. Markets aren't really moving much, right? Because everybody knows we're in that what would you call it? Partial shutdown that we're doing. So we're supposed to get some numbers today through the JOLTS reports, and then we didn't. So it's kind of like the information we do have. Is it going to be 100% accurate? No, it's not. We're probably going to wait till the EDP report comes out tomorrow as far as jobs go, right? So right now, the market, if you're looking at interest rates, we're still, I mean, we're higher than we were a couple of weeks ago. We're at 6.2 for a 30-year fix. And this is for your perfect borrower, right? These aren't my interest rates. These are what Mortgage News Daily posts out there. And they're basing it
Yeah.
off of Freddie Mac's last week's average, right? So what's going on with the market? How much is it moving? But realistically, I think we're going to stay in the lower sixes here for a bit. And more than likely, what most analysts are saying is that we're more than likely going to probably move up to the 6.5 range through the summer. So if you're seeing a rate that you like, this is what I'm telling everybody. If you're seeing a rate that you like
Wait,
right
did I just hear
now,
you say that right? You think we're going up, not down?
yeah, we're going to be going up in rate. So believe it or not, just because the way the market's moving. I always tell everybody January for some reason always has that 1 week in January that the market's amazing, interest rate wise, and then all of a sudden it disappears. And I think we saw it and it's gone. Right? Just like that, it's gone. But I'm thinking we're probably going to continue to move up slowly. We're going to probably average out to maybe 6.5. Probably by the time we get to summertime, we're going to see that. But everybody, of course, is going to be calling us looking for that 5.99. Remember that? Was that January 9th?
Yeah, I mean, I don't know I mean, I'm really curious. You kind of got you're torquing my tootle, Danny, because you know we're looking at the potential that they just threw the potential out there for the buying of the mortgaged backed securities on the deal, the QE 15 or whatever we're going to call it these days, and that impacted our rates when they didn't even do the money. Now, what happens when they actually put the money in? And what about this? All the talk on the news? Because let's pull the elephant out. Like Trump just talked about it and said he was going to bring this new person in for the Fed chair that's going to do everything in his power to try and drive not only the Fed funds rate, but rates down overall with whatever controls they have. So is that getting thrown out the window? Does that not matter anymore? Can you help me shed some light on this?
No, it doesn't get thrown out the window. I forgot to throw the disclaimer out there. Outside of something crazy happening, right? Like Trump coming in and helping for the rates to come down even further, quicker, right? Fed funds rate, that is. So will that translate into the mortgage rates dropping? We don't know, because remember, mortgage rates at the end of the day, bankers are looking at what does it look like 6 months down the road, not what's happening today.
Right.
So they're kind of setting up for, hey, we can't start a refi boom now, or we can't drop the rate significantly. Let's ride this out at 6.25 to maybe 6.5. You just never know. And then also you're going to keep the market at a certain affordability by keeping rates a little bit higher. Imagine right now rates are at 6.25. Let's just say 6.25. Affordability is the biggest conversation. Imagine if rates were to drop, what would happen to purchase prices? More than likely they would go up.
Potentially they could go up. I mean, because demand would go up, but that's
right. So I think they're playing with a little bit of that. Inflation is at a point where they're looking at it and going, okay, and unemployment's at a point right now where they're saying, okay, we're at a good spot. Do we really want to mess this up? The Fed's dropping the funds rate in March is not a guarantee. They might not do anything until May or June. So it's one of those things where we're looking at it going, okay, at what point are we going to do something? Or is when we get the new Fed chair in, when they're actually going to make a big drop, or you just never know. I can't tell you who's going to win the Super Bowl this weekend, but a lot of people are going to give their opinion.
yeah. I mean, well, hey, let's just rip the Band-Aid off too at the same time and say that hey, traditionally the Super Bowl ends up being the unofficial start to the summer selling season, or spring and summer selling season. So I'm hoping that holds true as well.
Right. And it still will hold true, I think. And I don't think the rates is going to be the biggest thing for people. It's just going to be that price. Where can I find the price that gives me the payment that I need at the current rate? So people are going to be moving. It's just they're going to be moving further out, or they're going to be going with a smaller property than what they were expecting to purchase. And that's a lot of the conversations that we're having. Instead of that 4-bedroom plus everybody wants, they're going with the 2+ or the 3+ with a bonus room or something. And they're being realistic, because if they want to be in a certain community, you're not going to get the 4-bedroom with 3 baths and a pool. That's not happening. You got to have some down payment for that to be affordable.
Makes sense. All right, we'll try and get us back on point here as well. It looks like my computer seems to be running all right now. Guys, here's the numbers for Fontana. Still inventory is low at 168. That's a big city. You can look at the market action index. A lot of things punching in the right direction. Same thing here as it is price reductions at 21%. And then check this out. Days on market. The 3 of the 4 categories are a month or less. Let's just call it a month or less. That's fast, in my opinion. At $1 million or 992 is still quite quick in Fontana. So what is happening in Upland, where Danny lives? Danny, you see here, this green bar is more aggressive than it was a month ago. Again, that's trending for action and activity picking up. And this is the lowest percentage of properties with a price reduction in probably 4 years. So that's huge. Now look at this. It's kind of all over the board. Your bottom 2 quadrants, 7 days at 850 seems to be a sweet spot. Upland 17 at 707, and then you got a little bit more on these $1 million plus. So we'll go 1.1 or 1.5, 1.6 ish. But again, those are still pretty quick for properties in that price point. So we are seeing things heating up. Now, you did hear me mention a few different times in regards to price reductions. Here is the national average. Right, 33.6%. At one point, it was 43%, but here locally, you can see that our percentage of properties with a price reduction is significantly less. So, all right, what's next? Joe, Paul, get ready. You guys are going to be up in just a sec. All right. So Friday, West End Real Estate Professionals. If you are in the real estate space, you're going to want to make sure that you're here. If you don't, especially if you don't know about Cal HFA, I kind of need to probably point back to Danny. And Danny, can you point out what is Cal HFA in a quick and concise way to be able to do that? And we can get over to Mr. Joe and Paul.
Of course. Yeah, no, Cal HFA is the California Housing Finance Agency. They have down payment assistance. It's not a grant. The biggest thing about it is it's a loan, right? But it's a silent second. So the program that they're going to be talking about Friday is the Dream for All program coming back again. And that's the one that gives you 20% for down payment as a loan. They're also going to talk about the other programs, but if you're looking for down payment assistance, trying to figure out how to qualify in these areas, this is probably one of the better programs. One of my go-to programs I like using. The income limits are high, and they use our underwriting decision to underwrite the file. They don't underwrite it again after it gets to them. So, but I think it's a great program. It helps out people all the way up to $205,000 in income in San Bernardino County. But for the Dream for All program, I think it's 164,000 drops down. But it is a great program.
It's big. Leanne Walker's flying down from Sacramento to give this presentation, so that we will have representation directly from the program. It'd be worth your while to be there. Friday morning, 9 a.m. start. There's a new start time, so get there 8:45, 9 a.m. start. It's over by 10. All right, let's turn it over to our trusted home inspectors at Trustmark. Guys, there's a whole bunch of stuff. I don't know if you guys want to start it out or you just want to start blazing random questions at you guys and seeing how you guys handle under the fire. What, in your opinion, are the top things as it relates to home inspection? Why is it important? If that's the first question, why is home inspection so important for us not to take lightly in the business?
Well, first of all, thanks for having us. And just to piggyback on something you and Danny were talking about earlier and Joe touched on, what we're seeing is absolute insanity for January as far as volume of business coming in. Best January I've seen, and I've been in the real estate space for 20 years. So I know we're a small sample of what's going on, but what we're seeing is tracking for hopefully a really good year. So that said, what I'd like to talk about is the number one thing realtors can do to reduce liability in the home inspection space. Obviously, the inspection is a very important piece of the transaction. It allows the buyer to understand the full condition of the home, but it also reduces liability for the agent in the transaction. Now, I see three different types of realtors.
So can I pause you real quick? I don't want to lose your train of thought, but
go ahead.
You mean that the realtor has liability in the transaction?
100%. 100%. I'll explain why.
I think it's kind of a big thing to point out because, well, why and how do you help them with that liability piece?
Absolutely. So let's just play out a scenario, and we see this a lot. And in some instances, this is actually brokerage policy. We are going to give our buyers 3 names of home inspectors, and they can vet those home inspectors and make the decision. So we're pushing the liability away from the realtor, so to speak, in that scenario. Where does that fall short? Well, the state of California is kind of funny. You would think that California would be the most highly regulated as it relates to home inspections. The reality is there are no regulations. We are not regulated. We are not licensed. We are not required to carry insurance. We are not required to do continuing education. We are not required to do anything. In fact, you can print business cards over at FedEx Kinko's today and be a home inspector tomorrow. So that's pretty scary. The idea of sending out 3 and letting the buyer vet is, okay, I'm pushing the liability away from me. The buyer, 9 times out of 10, they don't know what they're looking for. They're going to go with the lowest price. 9 times out of 10, that's what we see. So
I guess the
idea
question
is,
begins, what separates you from the other home inspectors?
Well, that's what realtors can do instead of sending 3 is find one home inspector that does things the right way. certifications that aren't required. There are many of them. There's CREA, which is the California Real Estate Inspectors Association. There's INTERNACHI, which is a national certification body. And then there's other certifications that home inspectors can aspire to, like a certified master inspector, which we're all of those, by the way. And
So yeah, that's
Carrie,
my question. So they're not required, but you can do it,
no.
and you and Joe both are certified on those.
Absolutely.
Yes.
Absolutely. And that's something that you should look for at a minimum with a home inspector, to carry some sort of certification. Ideally, the certified master inspector, and also at least $1 million in E&O and GL.
So those are to be definitely things that realtors, if you're listening, make sure that if you're sending home inspectors out, that they are certified, number one. Number two, that they do have the E&O insurance, because if they don't, guess who it probably comes back on? And I'm not an attorney. I'm not even going to play one on TV either. Ain't that right, Danny? We'll leave that to Judge Judy or something like that for her to do that stuff. You see? Or Mr. Wapner, God rest his soul. I think he's moved on to the big show in the sky. Hey, here's something that came up for me from the investor side of things. So I was gracious and grateful to be able to leverage you guys to come out after, and I get it. There's different thought process on this. If you're working with a real estate investor, they're rehabbing a property, fixing and flipping it. You know what? Before you rehab it or after you rehab it, you can have an inspector like these guys did for us come out and say, like, look, we're going to put eyes on everything that's here, so that when the buyer's home inspector comes, hopefully we've found all of those items and we've addressed as much, if not all of them, before it becomes an issue. So I know that I personally leverage these guys on some of our flips to be able to identify those items so that I could budget for, and that we could go back in and address before we procured a buyer. So that was a really big deal. Some of the stuff we didn't realize that was going on under the surface.
Absolutely. And that's another thing I'd like to touch on. And we've saw this more in COVID, but now we're still seeing it a little bit where the inspection is waived in order to get the offer accepted. Where that can be problematic is, obviously we have disclosures, and if I'm selling a house, I'm going to disclose everything that I know about. There's sometimes things called latent defects that we don't know about. So if we waive the home inspection and the buyer moves in and something latent is discovered, now we're dealing with maybe failure to, disclosure litigation, which is problematic, which we love to promote pre-listing inspections, because it does two things. One, it eliminates that from happening in the transaction. We're going to know right up front, without the buyer even having their own home inspection, what's going on with the home. And two, when you know before it's listed exactly the condition, you can use that inspection report as a punch list to get your house ready for market, then have that inspection report updated to show its current condition, and then use the report as a marketing piece, which can be pretty powerful.
Right.
That's a great point, Paul. And you know what? You just touched on something. A lot of people don't do the update. They rely on the original inspection. They're good with it. They don't want to spend the extra money to do an update. And I think that's a miss on the agent's part and buyer's part to say, oh no, I'm good. It was 3 months ago. I'm perfect, right? Everything was fixed. Well, no, I think, and an update isn't usually the same as a report, or is it? Can you touch on that? How much more in depth do you go on an update?
Well, we don't typically start from scratch. We'll go in and address the defects that were called out on the original report, and see, what is being cured. In doing that, we'll see if anything new has occurred, because obviously an inspection report is a point in time document. Conditions can change rapidly. Every leak that happens wasn't leaking the day before it started. So it's important to be up to date on that.
Not a big point.
I got a question. It's going to be like one of those facetious questions you guys probably don't like to hear, but I'm going to throw it out there just to address it as well, because it's there. Hey, do home inspectors just call out everything just to prove their worth? Like the switch that doesn't work, or is there anything that's out there? Or what is the, my favorite line on the report is always maybe past its, what's the wording, useful life or something like that, or
Yes.
approaching useful life expectancy of
Serviceable
like the air
life.
conditioner or something like that. I just see it. I kind of laugh. I'm like, well, damn it. Like, you're calling it out in every single thing in the house. You expect it's 20 years old. But Like help me understand that more. Maybe there's someone on this call that that's thinking something similar, and maybe help me understand it or appreciate it better.
Of course. And that's the tightrope that home inspectors walk. And really what defines, in my eyes, a good inspector versus a mediocre. You have to be able to define everything that's going on and disclose all of the defects that you see without it looking overly scary, because every home has defects. I've been doing this for 20 years and I've yet to find the perfect home. So ideally, you're going to disclose all that, but then have some sort of tiered system to let the end user and reader know what level of severity those defects fall in. Like a red category, is it water related or health and safety? Are these now issues that need to be addressed now? Or are they kind of in that yellow, we're getting ready to slow down, maybe kind of keep this in the back of your head, this might be something to address, or it's ongoing, easy maintenance things. And then the third category would be, hey, this is okay now, but this type of maintenance is needed, routine maintenance that, I never do to my home because I'm a professional hypocrite, but most systems require maintenance to get the full serviceable life out of them. So, it can be, like I said, a little bit of a tightrope. When we're talking about liability, I love to preach the liability on the realtor side, but when writing a report, there's also our liability. So if an air conditioning system that's a 1997 Ream is still kicking it out and running like a top, like the Honda Civic that they are, we'll note that. But we do need to advise that, hey, while it's working now, let's be realistic about it. You might have some issues down the line because every system and every component does have a lifespan. But
In your opinion, I'm going to go to speed dating here because we're getting towards the end of our time. But when is the best time to order a home inspection, in your guys' opinion?
Pre-listing, 100%.
Pre-listing. So traditionally in our industry, it's the buyer that orders it. But you're saying that on a listing, you believe the seller's agent or the seller should order it?
I 100% believe the pre-listing should be the starting point, because it is the starting line for transparency from the start of the transaction to the end. When obviously traditionally the buyer orders the home inspection.
Well, I'm just curious. So like if you do a home inspection, the seller pays for it, is the buyer still going to want to do a home inspection too? Because they're like, well, look, this could be a jaded or biased report. They missed something in regards to it. So now all of a sudden, just the home inspection get ordered twice in that case?
Yeah, they might. It's kind of a 50-50 thing, but it helps the seller be prepared for what they're going to see when the buyer finally does order their home inspection. Kind of sets expectations, and it does stop. We do lose home inspections because the house has been pre-inspected, and we'll receive those reports from the agents, because every time there's a home inspection report for me to look at, I want it, because I want to see what everybody else is doing out there. But transparency from the get-go, pre-listing is the way to go. And if you go up to the Bay Area, that it's almost a standard practice up there in that market to have the home.
It's funny you say that. I mean, yesterday I was literally having a conversation with somebody about this. So actually, it was Jennifer Felton. We were recording videos, and she said in Northern California, everything is already all up front. It's all already predetermined. It's all in the agent remarks in it, and all of this stuff is already pre-addressed. And they said as a result of that, in many cases in Northern California, the contingency periods are significantly less because the due diligence is already all there. The prelims in there, the pre-approvals, or like if it's an FHA approved, everything is in there for them to do their due diligence in advance of opening escrow. So the contingency periods are significantly less. So what are the last, because we're getting right up to that hour here, what are the top 1, 2, or 3 things that a realtor should look for when they're walking into a house to list a house or to show a buyer?
Water.
As it pertains to home inspection, like defects.
Water.
I got to be very specific.
The fundamental of building science is getting water away from the structure. Water can cause the more damage than anything other than a fire. So if you're looking for water, yellowing, staining, bubbling, water, number one thing.
Okay. If you're speaking to a buyer, a potential buyer or seller, what is the top one or two things you would say to each of those people in that scenario? Because there could be people that watch this that are not real estate professionals. They're just like looking, saying, "Hey, I got nothing to lose here." What do they have to say? They don't know me. Maybe I call them, maybe I don't. But what is the top thing to them? The same thing, or is it different?
No, the top thing to them, and I ask this question to every buyer every single time. Anything top of mind keeping you up at night? And the answer is always the same: the roof, the plumbing, the electrical, and the foundation.
Yeah, if I might add a little bit here, and be realistic as well. There's a lot of times that we run into situations with first-time home buyers where they're, affordability is a big thing, of course, and they'll choose something that it's pretty clear that it's in need of some love, and they go in with the thought that it's maybe this is better than I think it is. So, if they're seeing the real signs that there's a lot going wrong, and they approach it just with the hope that it's in better condition, be realistic. If you're seeing it and there's no doubt that there's issues, and go with your gut feeling, because there'll be times in situations like that where it takes two or three different properties and two or three different inspections with us before they find the right one, just because they were hanging their hopes on a property that just didn't meet their needs and their budget.
Right.
Couldn't
All
agree
right. All
more.
right. Guys, if they needed to reach you or get a hold of you, do they just search Trust Mark Home Inspection? Is that what it is, or what's the best way to get hold of you guys?
You would Google best looking home inspectors in the industry. We come up right at the top of the Google search, or you can go to tpsinspect.com or give us a call at 951-557-2700.
Paul, I just realized your mom did a phenomenal job at instilling confidence in you. So that is absolutely incredible. Kudos to mom today on that one. So it is
Lovely
right
woman.
there. We are in the month of love. Danny, I did just look at Mortgage News Daily here real quick, and it wasn't all that great. I mean, we're doing kind of what you were saying. We lost 3 basis points, so we're at 6.20. FHA still showing at 5.84, so sub 6, which I think is positive. So we'll kind of lean in on that. Just as a reminder, any escrow officers that could be watching as well, next Tuesday is the escrow dinner. Jennifer Felton will be out at the Spaghetti Factory in Rancho Cucamonga. Again, we're going to be breaking down FinCEN because that is coming like a freight train, whether we like it or not. It takes effect March 1st. So it will change the game in regards to documentation for anyone buying cash or in an entity after the end of the month. So March 1st or later. And so a lot of stuff to be known as to what's going on in there. But guys, it's a great day. I thank you so much, each and every one of you, for being on here today. Danny, any parting wisdom as we step out here?
No, I think it was a great conversation, and the one thing I would share, which I've seen as a kind of a ninja move, and kind of what Paul was talking about that they're doing up north, on as a seller, when you're getting a pre-inspection, you can show that to the potential buyers or buyers agents as a list of everything that you already know is an issue. So when they come back later trying to claw back their going over their offer by 30 grand, now they're saying, hey, we're not gonna keep it at 30 grand over because we saw these issues. Well, no, you knew that up front. You know what I'm saying? So it kind of disarms them of being able to do that and having to hold to their offer at that point too. So it also adds the credit of, hey, we already know that these issues are with the house. We're telling you up front. If you're going to offer 15, 20 grand over asking, guess what? It's because you're moving forward at that price.
Right.
I think that'd be a great idea for people to add to their arsenal as a listing agent.
Yep.
Well,
Guys, we do our best to add as much value to each week as we can. If there's a speaker or someone you'd like to see on here, please let us know so we can make sure that we get them on. And anyways, I hope you have an absolutely incredible day. May your team win in the Super Bowl. And if they don't, go Bills. There's always next year. That's all I got about that. So go Bills.
Thank you guys.